Welcome to the Economy Magazine. I'm Binyamin Tjong-Alvares with a report from the global economy. The oil price drop has undeniably been one of the main factors influencing the economy since last June. Our first report explores oil policy at the world's largest producer. And layoffs in Aberdeen illustrate the harsh reality in the wake of the sudden oil drop. First, the headlines. The Federal Reserve, in its monthly meeting on Wednesday, signaled it would keep short-term interest rates near zero at least until mid-year. Though economic activity is strong, the Fed remains wary about low inflation, slow global growth, a stronger U.S. dollar, and international market turbulence. Currency traders saw the statement as affirmation of an upcoming rate hike, sending the dollar higher against the euro and further pressuring crude oil prices. Major stock indices tumbled in turn, with the Dow Jones Industrial Average ending Wednesday down 1.13%. Greek bank shares suffered their worst one-day loss on record on Wednesday as the new government plans to renegotiate its €240 billion bailout. The country's four biggest lenders saw their stock prices plummet by an average of more than 25%. Greece's new anti-austerity government called for a pan-European New Deal to make its huge debt socially manageable. But German economy minister Sigmar Gabriel urged the new government in Greece to show fairness to fellow citizens in Europe who helped bail out the crisis-ridden country.
178 Milliarden Euro stellen die Mitgliedstaaten bis
278 billion euros. That is what member states have made available to Greece. We can't say that it is a poor show of solidarity. The people that made it possible were the citizens of other member states and who want in return solidarity and respect of these commitments.
Japan's leading independent budget airline, Skymark Airlines, filed for bankruptcy, blaming a weak yen and a dispute with Airbus Group. The low-cost carrier had liabilities of $604 million in its bankruptcy filing and will delist on March 1st. Last July, Airbus revoked a $2 billion contract for 6 super jumbo jets, and in December, filed a lawsuit over unpaid deposits. Japan's two big carriers, ANA Holdings and Japan Airlines, will likely each try to gain control of the bankrupt company to access its valuable landing rights at Tokyo's crowded Haneda Airport.
We had been paying for the lease of the aircraft in dollars, and with the sudden weakening of the yen, the burden of those payments suddenly increased. As such, due to the increasing competitiveness of other companies, the weakening yen and increasing fuel prices, our earning and performance suddenly declined.
Facebook's revenue grew 49% in the fourth quarter, helped by mobile advertising growth. The world's largest social network now has 1.4 billion monthly users, with 86% of them accessing its service on mobile devices. Mobile ads accounted for 69% of advertising revenue in the fourth quarter, or $2.48 billion. But the revenue growth was the weakest since the start of 2013, and spending rose faster. Facebook warned that 2015 would be a year of heavy investment as the company steps up efforts to expand its collection of products. Let's see a comment by Ian Scher, CNET News executive editor, on Facebook's spending strategy.
Well, right now, investors pretty much had expected a lot of what Facebook said. They did do better than most analyst estimates, but at the same time, one of the things that's challenging Facebook is their costs, which is something, by the way, we've heard about other companies. Google, for a long time, the story around them was costs. And so Facebook is growing its headcount quite aggressively. They are doing a lot of acquisitions still. And so investors are still getting their kind of heads wrapped around this idea that this company is not going to just sit back, make money, return money to investors. They're really going to be aggressive in their spending, and they believe the aggressive spending is going to win out over time. But a lot of this aggressive spending, again, $2 billion on Oculus, this thing's not going to become a real thing, Mark Zuckerberg says, until maybe 10 years down the line. I mean, it's going to launch soon, but it's not going to become a meaningful business, as he calls it, for a very long time.
Saudi Arabia, OPEC's largest oil producer, has refused to permit the oil cartel to cut supply in an attempt to raise the oil market. And though Saudi Arabia's new king is not likely to change the country's oil policy, he may opt to finally diversify its economy. I24 News reporter Natalie Ehrlich brings us the report.
Saudi has a new king, and with it, a new economic outlook. King Salman wants to limit Saudi Arabia's dependence on oil, which currently stands at about 90% of GDP.
King Salman has been a strong supporter of promoting the kingdom as an investment destination.
With a daily production of 9.7 million barrels of oil and 800 billion of financial assets abroad, Saudi Arabia has no immediate concern for falling oil prices. Still, the 50% plunge in prices could affect the country, at least in the medium term. Riyadh is therefore trying to find new ways of investment, despite the budget deficit.
Already we've identified healthcare and transportation investments valued at $140 billion in the coming 5 years.
Saudi also wants to develop its high-tech sector, which is expected to alleviate the country's 12% unemployment.
What's interesting is that researchers have found that startups together with sort of new firms account for roughly 70% of overall job creation. So we're worried here in Saudi about jobs. The best way to solve the jobs problem is to have lots of new entrepreneurial startups based on technology that solve new problems.
Unlike other Gulf countries like Kuwait, Saudi has not opted for austerity. Its oil production capacity, estimated at about 80 years, allow them to have a more optimistic outlook. Today, Saudi concerns are focused more on a nuclear Iran and the expansion of the Islamic State.
Clarity Capital analyst Sam Chester joins us now for a discussion on the oil price drop and what lies ahead for Saudi Arabia under King Salman. Mr. Chester, thanks for joining us.
It's a pleasure, as always.
So, let's look at this new king of Saudi Arabia. He essentially has been more or less ruling this a lot behind the scenes. He's been around since 2012 as the crown prince. He was involved, if I'm not mistaken, as defense minister since 2011. Mm-hmm. He's been calling the shots, and probably a lot of the current strategy in terms of not lowering supply comes from him and not from King Abdullah. What should we expect here on his economic impact?
So the first question with Saudi Arabia is always going to be oil. What is the bottom line impact of a new head of state in Saudi Arabia on the price of global oil? As we all know, the oil price was one of the biggest stories of 2014, right, dropping to $50 from near 110 in the beginning, and it's continuing to drop, and it's one of the key metrics that people are looking at in 2015. So having a new king of Saudi Arabia, after King Abdullah essentially ran the largest oil producer in the world for 20 years, potentially has a tremendous impact. In fact, when it comes to the price of oil, as you mentioned, the new king, King Salman, a half-brother of the late king, has been very involved with the late king on the country's oil policy. So most oil experts around the world are predicting that Saudi will maintain its oil policy. So the key officials who were behind Saudi refusing to reduce its production, which is what is keeping the price so low, right, they're still in place. So I would say part one to your question on economic impact on the oil front, we can expect things to probably stay the course, which means that the price of oil will probably not rise for the remainder of 2015.
Right. Obviously, the price war that we're seeing right now in terms of maintaining the market share that OPEC has, and specifically that Saudi Arabia has, being the largest producer, of course, is mainly targeted towards, essentially targeting Russia and America. But is this story only about oil? Is there something else going on here?
So when you consider Saudi Arabia's economic impact, there is an element, there is part of the story that is beyond oil. Let's again look at the legacy of King Abdullah. He's been running the country for nearly 20 years. In that time, he's really been trying to tackle economic challenges outside of the price of oil. And the main one in Saudi Arabia will always be employment. Saudi Arabia has a tremendous youth demographic issue where over 50% of the country is under 25, and those people need to be put to work. And that's something that King Abdullah has really been almost revolutionary in trying to raise employment in his country. Those are challenges that the new king will now have to tackle, and those are challenges that will only continue to rise. And of course, the importance of all of this is that Saudi Arabia, thanks to King Abdullah's policies over the last 2 decades, is the largest economy in the Arab world. It's by far the largest economy in the Arab Gulf. And so, although that's not a direct oil issue, it also has a secondary impact, which is that if Saudi Arabia's economy doesn't work and if growth declines, that will affect the stability of the regime, which will affect the regimes around it.
Now, in terms of, social and political views, King Salman is very different in terms of, different from Abdullah, isn't he? We're seeing this year women's suffrage for the first time, but women still aren't allowed to drive cars in Saudi Arabia. Where do you think this is going to go? A lot of the people in Saudi Arabia, if I'm not mistaken, are also employed by the government sector. They're going to have to be reforms, right?
So I think what you're pointing at really brings into the fore, which is the real question, which is transition in the Arab world. Let's look back at the Arab Spring. The Arab Spring, in some sense, was set off by different Arab countries looking to transition to a next generation of leadership. Egypt being the best example. Everyone knew Mubarak was getting old and was about to die. Who would replace him? Egypt didn't have an answer. In Saudi Arabia, the answer has always been that one of the sons of the founder of Saudi Arabia will always be the king. That's worked for about 60 years. The problem is that the new king, King Salman, is over 85 years old. His crown prince is over 80 years old. Right. What's going to happen within the next 5 years, and perhaps even within the next year, is that the next generation of Saudi Arabian princes is going to have to come to the fore and run the country. These are people in their 40s and 50s. Who exactly will emerge? It's unclear. And that is when the big question will arise.
All right, Mr. Chester, we're going to continue our conversation after the following report. Crude oil prices have plunged 60% since mid-June, hitting petrol producers hard. For the town of Aberdeen in Scotland, it has already meant layoffs and more economic turmoil could lay ahead.
A storm has struck Aberdeen's economy. North Sea oil and gas has made the Scottish city prosperous as the hub for a £35 billion industry. But a dramatic fall in the oil price has highlighted the vulnerability of Aberdeen's reliance on the sector. Many of the big producers like BP and Shell have announced job losses by the hundreds.
For the thousands of workers that are facing redundancy, it's a crisis. It's a lifetime crisis for them. So it means a lot of redundancy, a lot of workers having long-standing terms and conditions changed, which will see longer shift patterns, longer hours, less benefits. Benefits are cut.
There are also cutbacks on contractors and services provided by the hundreds of companies that are set up in Aberdeen. Energy and related industries provide over half the jobs in the city. It's benefited from unemployment rates of only 2% and wages that are almost 50% higher than the national average. While many are worried about the negative impact the drop in oil market value will have, most are confident that the price will pick up again eventually.
It's happened before and it's happened again, so we've just got to go with it and hope it picks up. There'll probably be job losses because of it.
I think the biggest problem is probably the support industries, including hotels and things like that, because they're relying on everyone sort of flying in, flying out, whereas most of your support people here, for the oil industry specifically, actually will operate worldwide. So there is an element of spreading the pain.
Politicians in both Holyrood and Westminster are promising action like easing the tax burden on the industry to help cope with sliding prices.
And certainly I think there needs to be action sooner rather than later, but I want to make sure that they get it right, and it's not just a knee-jerk reaction to the present prices, because what we want is a stable environment that will allow the industry to operate effectively for themselves, but also make sure they're still contributing to the UK economy in the form of taxation, whether the oil price is $50 a barrel or $100 a barrel.
If prices stay down, the North Sea's ageing fields will be far less lucrative to develop, meaning the end of Aberdeen's black gold bonanza.
Okay. So, Sam, obviously, we're still looking at a situation here where Saudi Arabia wants to control the market, wants to control the prices. On the one hand, you have Russia, which has been pretty much controlled with the ruble, sagging completely. And on the other hand, America, which is a little less controlled. It's not entirely clear where it's going to go. If the Congress comes in and loosens export limitations and such, it could be very bad for Saudi Arabia. Where do you see all of this going?
In terms of the global price of oil, I think there's really a double-edged sword here, which is economists are saying that in 2015, if the price of oil stays at about $50, $60, it's essentially going to be giving $500 to every single American consumer because of the cheaper price of gasoline. That's great. But then we have to remember all the other impacts. When gas is so cheap, there's much less of an investment and an inducement to use alternative oils, oils that are better for the environment, that are better for the economy as a whole, that are fundamental policies that many Western economies are trying to focus on. So that's the other element. Taking it back to Saudi Arabia, though,
right.
I would just add that as someone who has worked in Saudi Arabia extensively in the past, the impact that the new king will have is going to be so important because ultimately Saudi Arabia will rise or fall on how effectively the people running the country really build the private sector there. Until now, with all that King Abdullah has tried to do in the last 2 decades, it's not working.
Okay. Well, Sam Chester, analyst at Clarity Capital, thanks so much for joining us.
It's always a pleasure, Binyamin. And
that takes us to the end of this Economy Magazine, your daily source for economic and financial reports at I-24 News. I'm Binyamin Tjong-Alvares. Follow us again next week for more on the economy and, of course, the sagging oil prices. Thank you very much.